Good morning. It's Tuesday. How are you, Glenn?
Very good. Thanks for having me, Peter.
I always
Pleasure
look
to be
forward
back.
to Tuesdays. It's an upgrade.
Thursdays.
Yep.
I like a little more, but Tuesdays we'll take it.
Tuesdays are good.
Yep. Good weekend.
Yeah, very good. Anything exciting?
Oh, I did Pilates.
You did.
Yeah. It's more of the sculpting season, So winter,
Yeah, sure.
we're
Sculpting?
we're in the gym with Ryan Grace, Chris Grace. Just taking whatever supplements they give me, lifting as heavy weights as possible. But summer's coming, swimsuit's coming out soon, so we got to tone.
So I always thought Pilates was where you lay on that wooden thing and pull the strings.
Yeah, it's.
But there's more, because my daughter's getting her Pilates training and certificate.
Oh, nice.
There's a whole, there's sculpting. There's a whole different thing, isn't
Oh,
it?
it's I don't know. Yes, I think the two variations. I went with my girlfriend. The two variations are you can do it just on a mat, like a yoga mat, or the reformer, which is the
reformer.
contraption.
That's what it's called, right?
And, oh my gosh, I've never been so lost in my life. It's like what is it, Twister, where they're like calling out color. The springs are color coded, which is the weight resistant.
Don't want to know.
Then they're like left hand blue, right hand
Did you feel
pull.
it? Was it a good workout?
Yeah, my glutes were torched.
Oh, I bet.
It was horrible.
Yeah.
Because you straddle like one moving board.
So you were on the reformer.
Yeah.
Okay.
And then you just like try and go as wide as possible without busting yourself. It's intense, but it was pretty funny. So
you are you're going to be ready by June to bring out the American flag speedo and be all
exactly
set. Mark Spitz.
But then I had one of my rec basketball games the day after. Wasn't good.
No,
I was not.
when does the league pick up? I thought that was fall. Was it summer?
They have them all year round.
Okay.
I refuse to do it in the winter because I'm not gonna Uber to DePaul when it's -5 out. So
When does Glen basketball season betting start? That was some of the best Caberta dollars I ever made.
Yeah, that was good. This one is more volatile. The market's open. I had 16 last game and then 2 this past weekend, so that not consistent.
Look at you.
But Sunday games kind of tough.
All right, very good.
But I got caught in the rain.
Oh, at the end of the day.
Yeah. But now weather should be up.
Now, are you going to DePaul to play outside?
It's in their rec center.
Okay.
So indoor, which is nice. But
It's indoor.
I just bike straight up Halstead.
There you go. Look at you.
So trying to stay in my fitness because
Active.
I don't
Well
do
done.
it during the week enough.
Well done.
I'm just
Whatever
at my
happened to
desk.
bands training?
Clink still does bands training.
He does do
He
bands.
just doesn't do as good a job of getting people in his class. One of our coworkers likes to lead a resistance band workout, and for a time he was getting 6 or 7 people in at a time. Now I think he just does it by himself or with 1 or 2 people that he coerces into doing it. It's a good workout. Somehow it's all just shoulders though, so you just feel it just hurts. But we're good. We got an exciting week coming up this week.
We do.
First full week of May.
Yeah, speaking a little bit of hurt, actually quiet kind of inside day yesterday.
Yeah.
We're waiting again. Are we waiting? No. We've got FOMC on Friday, as you pointed out to me, be Bank of England Thursday, Fed Wednesday.
Yep. We can go through the calendar for this week. Today, nothing crazy. We were looking
You're not hanging on that Swiss unemployment rate?
No, just a little soft. But yeah, we were checking this to see if there were any UK data this morning, but nothing really. So we'll have to dig into that. But yep, Wednesday, Fed decision expected to hold. Getting some BOJ minutes. Who knows what's in there? Then Thursday, BOE interest rate decision. A cut expected. That's what's sending a little bit of speculation into our pound-dollar pair.
Yeah, but again, a cut in UK rates and the pound's up. How many pips this morning?
A lot.
Yeah, and this was a rally that actually Euro's up tiny bit. Everything else is mixed. This is a big move. 70 pips. That takes us probably standard deviation and a half out of the daily range. More so if we go from net change at the end of 5 o'clock our time.
Yeah, I mean, interesting with, we get this little low liquidity hours after U.S. close, a pretty strong move around Asia open, and then just a very firm bounce off of those lows, but nothing on your radar.
No, it started like at 4 o'clock in the morning. It just started to move a little bit, and not much of a pullback on it. It's been pretty much straight up. If we jump over to euro, we're going to see it again. Euro, we're now back into that was a big move. Those 12 pips from 13.20 to 32, but good. Let's take a look. Let's stay in this time frame. Let's go to euro sterling just to see if there was something there. So
a little bit.
All right. Now you wonder. Okay, nothing's going on.
Oh, there you go. Yeah.
Nothing's going on. Cable's on a tear. Why? This doesn't make any sense. There's no news announcements. Nothing's coming out. All this other stuff is at the end of the week. Again, people just don't trade. Again, in the U.S., we're very dollar focused. We trade everything's priced now, but the world trades in a basket of currencies. So euro sterling, when we look at those non-dollar crosses, euro sterling, euro yen, are some of the kind of big boys that are interesting. Now, you see this, again, we started a little bit of down move to the bottom end of the range, and then we saw that accelerate. Now, could this just be euro sterling moving? And it drags the relevant pieces together. Because, again, euro sterling will be reflected in euro USD and sterling USD. So, and what we're seeing here is this is primarily a sterling move. And we're seeing euro sterling get beat up here pretty much. So when you look at, is sterling having a pretty good rally? Absolutely. We're into kind of a congestive area that isn't necessarily saying, short of the fact that we've moved, everything else is up or down 20 pips. This has moved 50 pips in 2 hours. It's hard, and this, I should be careful to say, what's the better trade? Well, it's whatever works for you, but you put the appropriate caveat in there. When I look at this, sure, you can go back, and let's just jump back to sterling really quickly. It's a big up move, but there's not, and let's tighten up the range a little bit. Can we grind up to 134, 134.20? Absolutely. So is this a good level? Well, it's a 50-point run, which is great. Go back to euro sterling. Euro sterling.
Oh.
Perfect. This actually, to me, sets up much better as short-term day trading price.
Right.
I like this one because selling sterling right now, there's some clutter for the next 50 points. Am I going to, so the question becomes, if there's clutter, where am I getting out? Am I just going to pick a random dollar amount? That's one way to do it, to stay disciplined. I like sometimes market structure to help me out a little bit. There's no market structure for 50, 60 pips. So I am trading short-term here, and I'm looking for a pullback in sterling. What am I looking for? If it pulls back half the 70 points, 35, what am I risking to the upside? Probably 50 or 60. Otherwise, you're going to get caught up in noise. I don't like that trade so much. This tends to set up a little bit better for me because there's a decent level of that could be pulled back here, back into that above 85 cents, kind of the middle of the range. And if I'm wrong, I know where I'm wrong. And we're pretty close to that level right now. For me, very, very short term, this is where I will forego the dollar component and trade the relative value of the pairs. And what's great with SpotFX is I'm not building out things. I'm not buying one thing long. Could you build this out by selling sterling, U.S. sterling, and buying euro USD? Absolutely.
Is there any merit to that ever?
It is.
It's double the margin.
It's double the margin. It is the weightings. You're going to have to figure out the appropriate weightings because the nominal levels are different. It's 133 versus 113. So how do you weight that? Do you weight that on an IV basis? Do you weight that on a notional basis because you have to convert it back into dollars? No, I don't want. Can you do it that way? Sure. It's an awful lot of work.
Yeah.
I would rather just trade the product. less friction. You're not getting in and out twice. You're getting in and out once. All better. So I think we're not running you down the rabbit hole of
Israeli shekel.
yeah, sterling lira, Turkish lira, and stuff like that. No, these are not places where we want to necessarily go. Yes, we have 80 plus FX pairs, and I'm not divulging anything. Proprietary. There is a community that trades Turkish lira. They love the overnight rate, and they love that action. Is it a big community? It's a dedicated community within our ecosystem that trades it. That's great. Or they have either some investment in it, some understanding of it in a different way. I like to stay where things are, a pip and a half wide. I like to stay where things are relatively liquid and orderly. And it's not that a Turkish lira trade is disorderly. It's just a thinly traded market with a wider bid-ask spread. If you're willing to accept that, that works for you. I like things that have, again, for me, the bid-offer spread is friction. The tighter that is, the less friction, the less cost I have of doing business. One of the things we like to talk about is when you look at us and you look at other FX providers, where is that spread? Be mindful of the width of that spread. That's your cost of doing business. Interesting setup here as we go through it. Where do you want to go next, my friend?
I mean, I've got some slides on.
Perfect.
I got some slides on the Australian dollar. If we want to get to that.
Yeah, because this has been a pretty good ripper there. We got a little pullback yesterday.
A little bit.
It was a nice pullback. It was actually 40, 50 pips.
It was good, but the greater story zooming out is this Australian dollar, U.S. dollar breakout, and just what's impacting this rally. Can it continue? Because we know when we look at the Australian dollar over a long time period, a lot of different storylines can be attached to it, whether it be gold, whether it be risk sentiment, whether it be China. We've got all of those things at play, but just wanted to break down what we think is actually driving some of this breakout.
And I love the fact this makes you such a good trader. It's never just one thing. Don't get caught on one thing. Well, gold is here. This should be here. Nothing is correlated one-to-one. If it was, there'd be no trade because it's perfectly arbitraged. There's always a confluence of events that come in and out. We balance that. That's part of our decision-making. Part of the decision-making of our trading is, what do I feel? And this is where sometimes you're right, sometimes you're wrong. What are the overriding drivers? But they all come together. So that actually frees you up that you don't have to be an expert on Fed policy. You don't have to be an expert on trade policy. You don't have to be an expert on what the heck is going on in China, because that could take you a lifetime and never get it. You just have to be comfortable with price action.
Right, and price action is what you got in April here with this Australian dollar pair. I mean, we're at new year-to-date highs. Hasn't traded 65 cents since beginning of December. Now we're right there. Got a little bit of pullback, but we're comfortably through the kind of chop we saw at the end of April, and up more than 8% from the fallout at the beginning of the month from Liberation Day and what have you. So just a really crazy run here for the Australian dollar. New Zealand dollar also getting some of this as well, but just sticking to the Australian dollar. One of the main things when I see this graph over April, and keeping track of obviously U.S. equities, you can see a lot of similarities. So went ahead and ran the correlation for the Australian dollar and the VIX, U.S. stock volatility.
Interesting.
And this is back at highs for the past 5 years at least, on a 3-month rolling basis, above or greater than negative 0.5 here. So a pretty fairly solid correlation. And we've seen a lot of that fear lift from the vol shock in early April, and now moving pretty similarly here, and kind of speaking towards the risk on sentiment, we saw the move in the currency space, a big flight to the Swiss franc,
Right.
the Japanese yen, now some of that coming back, and more demand flowing into risk on currencies like the Australian dollar. That piece all good with you?
Yeah.
This piece, is the headline here, and you think this has got to be doing something. It hasn't really been, the China trade war news hasn't really been affecting this Australian dollar, how you think about it. And so ran kind of what I thought could be an interesting correlation here, which is Chinese equities and U.S. equities. Me personally wasn't as familiar with what this historic relationship is, but now you're seeing a really strong positive correlation,
Right.
which to me tells me that this trade war thus far hasn't been one-sided. It's really been matched, as you've seen the tariff
Right.
hikes match 1-to-1, and so when you're thinking about the context of the Australian dollar, it's less so, at least how we've proceeded thus far, it's less about who's going to win a trade war, but really no trade war, good for Australian dollar, and trade war and uncertainty, regardless of who's involved,
Right.
would be less beneficial. Is that a fair assessment?
I think it is. I think the one thing in the previous chart too, around fear subsiding and that negative correlation getting so robust, is where are we in terms of pricing? We were at one point multi-decade lows. I think that's, it would be interesting to see the correlations if we were more mid-range, if we were 70 cents, 75 cents Aussie. So I think they're very interesting takeaways here in terms of context, but I think where we are in terms of prices also helps drive that a little bit.
Well, there you go. You called it right there, and we pulled up here the last year of price action in this Australian dollar market, just to get a sense of historical context from a price action perspective.
Right.
And here I've thrown on some moving averages just to kind of run some quick numbers for us over this time period. And 65 cents is right there at the year-long average. So what do you take of that? I mean, we've gotten as high as 69 cents in the past year, last October. A lot of historical room to run, but are you saying that these strong relationships we really only saw because we were bouncing off of multi-decade lows, kind of that sense of when volatility spikes, that correlations tend to go to one.
Exactly.
And now we're kind of shaking out. Is there still room to run here? Or?
I think this is classic Aussie. It gets very elastic when there's uncertainty, and especially when we get to new price levels. And below, 61 cents was a new price level, all the way down to almost 59 cents. So as cheap as 60 cents seemed, and it was cheap, we got down there, we traded another 100 pips lower, and we did it 4 or 5 times. I think that what we've done now is basically normalize that down. I mean, I've traded Aussie at 48 cents and $1.10. So I only say that for context of it. We want to be realistic in our expectations of where things can go, but this Aussie and Kiwi both have a proclivity to get this outstretched elasticity. I would think that really, if we go back another year, you would say the mean is probably closer to 70 cents, not 69. So what have we done in relation to other dollar pairs? We put in new multi-decade lows. We didn't do that in euro.
Right.
Everybody talked about, euro's going to par, cable's going to 110. Never got close. We did here. Now, we've normalized back to the middle of the year's range pretty quickly. Nothing goes one way in one direction. If you look at the short-term tape action, though, up here, higher highs and higher lows, which means that every rally we put in a new high, and when we pull back, we never pull back below the previous.
And just recently, really breaking out of that 64 range.
Right. And, I think as much as we thought 62 cents and 61 was overdone, don't expect the markets to now be completely, well, we're right back in the midpoint. Now we're going to pause. I would imagine that depending on what kind of reaction we get out of the Fed on Wednesday, and I'm trying to figure out what he says, which is going to be nothing. Not in a bad way,
Right.
but just there's nothing for them to do right now. And that statement is after a 500-point rally, which just brought us back to normal. Now, sterling, when we looked at this morning, it's almost up to 134. That's well above the year's range.
Right.
Euro at 113.5, well above the 104 to 108 range.
And those moving in two distinct kind of separate rallies.
Absolutely. So you can make the case, well, this is normalized, but it certainly hasn't outperformed euro or sterling. And absolutely. And if we looked at a Euro Aussie chart, we would see that fact. I think we probably see, depending on tone and the numbers on Friday, we could stretch a little bit up to probably, we trade above the 200-day. We probably stretch 75 or 100 pips higher. But I do know that things don't move one way. We've had a normalization. And I think this is what's hard sometimes to do. Well, I should have bought them at 62 and just held on.
Sure.
Yeah, you would have taken a lot of pain on the way down, though. That would have felt like, the world's collapsing. I think that we're going to have a hard time getting back, I think, anywhere near the highs over the next 3 months. We're shorter-term traders. I think rallies up here become interesting if they don't hold. In other words, can we print to 66 cents? Absolutely. I want to see what they do around there, because that may be okay, we've run the gamut, and everybody, again, market tends to go where it can inflict the most pain. Anybody who is a stubborn short might be shaken out, and then maybe the market turns a little bit. But I also want to be responsive to, if we get a dip down on any of these knucklehead numbers, and we print on non-farm payrolls, not non-farm payrolls, but on the because we already had that Friday, on the FOMC announcement, we print 63.5, 63.25, which is another 100 pips lower, and we stay there less than half an hour. That's an interesting level to buy.
Yep.
So, don't think in your mind, well, I only want to buy dips if we get back to 60 cents, because that was a good level. Think about the available range we have here. I think right now to say, can we continue? That's going to be a little bit more of a struggle. Right now, structure, which is the higher highs, the higher lows, means that there are still buyers out there who are interested at buying here. As long as that runs, I'm not inclined to be short, but I think we've got a great binary event tomorrow that may give us a print above or down. I'd be willing to trade either side of that and see how that works.
There you have it. Australian dollar at an inflection point, moving with volatility as of late. But how much that can continue, who's to say? Stay tuned. That's all we've got for this segment today, but want to call out just one more piece here in the Tasty Trade platform. We've got some exciting stuff on our side at tastyfx.
Right.
Got some exciting stuff
now, this
coming.
Is it. This is in desktop, guys. It's coming to web very shortly, but just to give you a little sense of what's coming down the pipe without revealing too much, but some exciting new products coming out of into the Tasty world.
Yep. So if you're in the desktop platform, you're on your watch list tabs. I'm sure you'll find now a new category, Forex pairs. Take a look there. Go to any Forex watch list, click on any pair here, and you have the opportunity to join the wait list here to be notified when something crazy happens.
Right. And now, and if you want to go over the left side there, you can run right down there and bring that up, and that's going to have the bid ask and net change. Again, this is on desktop. It's coming in a day or two, hopefully on web. But this is as we start to get closer to bringing FX into the Tasty world. We thought this was a good way for people to be able to take a look at prices. And you know what? If you're interested, sign up. We'll make sure we keep you apprised as we get closer to the impending launch. So lots of exciting stuff coming.
All right, that'll do it for us today on Forex Focus. Got an exciting day ahead of you, so stay tuned for Tom, Tony, and Vanetta up next on Tasty Live.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Tasty Live's godfather of options